Well, joining me now to take a deeper look at the markets amid jobs, earnings, and trade talk is Sylvia Jablonski, CEO and Chief Investment Officer at Defiance ETFs. Sylvia, welcome.
Thanks so much for having me. Happy to be here.
Happy to have you as well, and so much to talk about in the markets these days. What are you watching most closely?
Yeah, I think, in the near term, I'm watching a lot of the talk around tariffs and trade talk. I mean, that obviously moved the market on Monday, and then it kind of recovered Tuesday. We have to see where all of that lands, and whether that ends up being a fentanyl story or whether that ends up being an onshoring story. And I think there will be a big difference in terms of how the market reacts. I'm also watching earnings. The market didn't love what they heard from Alphabet, and I think we'll kind of have to see how earnings roll forward this season. But if you look at the numbers so far, I think it's about 77% have actually beat on revenues and close to that on EPS. The overall economy is in a strong spot. Corporate earnings have been good. I think we're all just really salivating for that monetization of AI, and we're not satisfied with it. So let's see what kind of trucks on with this.
Yeah, so we've seen some choppiness, but the market did end January higher, the Dow leading the way, up more than 4%. Certainly this week it's been extra choppy. What do you recommend to your clients in this environment?
I mean, when I saw the market pull back on Monday, and this is kind of how I've been reacting, this has been a buy on the dip market. And the reason for that is that, GDP is between 2 to 3%. Corporate earnings have been steady and strong. Maybe we're not meeting these stellar expectations that the market keeps putting on these big firms, but earnings for all intents and purposes are pretty good. Jobs are steady, consumers are spending. There's a lot of reason to believe that we're still in that soft landing. We have a president that's pro corporate America, pro markets. It should be a good year. And so when you see stocks falling 5-10% on any day, and they're the stocks of the future, like the Googles, Amazons, the quantum names, the AI names, I'm a buyer on the dips, and those are my good dollar cost average days.
I'd be curious to know your takeaways from the other Magnificent Seven stocks that we've heard from so far during this earnings season, 4 of them, in fact, last week.
Yeah, I mean, I think some of those reports were a little bit healthier and happier for the market, right? I think the market I expected Apple to be a little more negative than it was, but I think the overall feedback there was that growth in services was pretty good. And then, if they actually get that upgrade cycle and they kind of get that AI cycle, which they're seeing, higher purchases in countries where that AI intelligence is there, that company could still have some room to run. But I think overall, again, corporate earnings are pretty strong and solid. We're just expecting a whole lot.
Mm-hmm. When it comes to artificial intelligence, Oracle also has a play here. It is an NYSE listed stock. What are you watching when it comes to Oracle?
So Oracle has just been one of my favorite stocks for the last year or two. And it's funny because I think it's almost like this forgotten tech stock. IBM and Oracle, everyone pushed them to the side. But when they were pushed to the side and not in the news, they've been doing so much R&D on quantum computing and AI. And now it turns out that Oracle is poised to be one of the top AI infrastructure plays in the market. They also have this potential tailwind coming from government spending on the Stargate project. I think it's $500 billion, but $100 billion being deployed now. And, valuation-wise, it looks a little bit like a better buy than some of the other Mag 7. So I think AI leader, AI cloud domination, I mean, it's a stock that's doing quite well.
How do you discern basically outperformers in this artificial intelligence space, knowing that it is still relatively nascent?
Right. And so I think you kind of have your outperformers, but I think what we as investors have to do now is look at it across sectors, right? So NVIDIA is arguably the winner in chips so far, right? We'll see what happens in years to come. And then, you have AI infrastructure and energy, and that could be companies like Vistra, GE Vernova, Constellation that are doing really, really well. They're the powerers of AI, the energy behind it. And then, again, the Oracles, the Google Alphabets with Willow and their cloud presence. And then you have the supercomputing companies like Quantum, IonQ, Rigetti, D-Wave that are also part of this, and they're kind of that next generation of AI.
It sounds like those are some of your investment themes this year when it comes to AI. quantum. What other major themes are you coalescing around?
Yeah, I think, a lot of it is going to be, again, these like subsectors of AI. So the AI energy play, AI infrastructure, quantum computing, data parsing, physical AI, things like this. I also think that we've forgotten about like the connectivity that's required to get AI to go. So that 5G, 6G theme, mobility, that lower latency in order for this to run. So I'll be looking at some of those names that have been a little bit forgotten too, whether it's like the American Towers or the Verizons or, kind of these more communication style names.
We do see reactionary responses to the tariff talk and the trade policy that we've seen first announced by the White House on Saturday, and of course, the ensuing news, including retaliatory tariffs by China just throughout the past few days or so. Are there sectors that would see their earnings impacted by these tariffs?
Yeah, I think the market as a whole will more or less react negatively if the tariffs go into effect the way that they are. But I also think that there's a very low chance that they go into effect the way that they are. What might not suffer could be things like small caps, like U.S. onshore, and I think ex-Mag 7 would bode better than, say, Mag 7, right? So the other 493 names would probably be less affected than the top 7, even though it's not, kind of like obvious that they're the ones that are getting, the tariffs placed on them. They're just like the market leaders and the highest beta stocks, and so, they take a hit.
All right, Sylvia Jablonski, CEO and Chief Investment Officer at Defiance ETFs. Sylvia, thank you so much.
Thank you.
Great to hear from you.